investing versus trading. What's the actual difference between these two things? So starting off with investing, time horizon is one of the biggest differentiating factors between these two things. With investing, it's much more long-term, right? So years, decades, lifetimes, depending on what your outlook and thesis is with the position. But with trading, it's much more shorter term, okay? So days, weeks, months, sometimes minutes, seconds, depending on what you're doing. But that is probably the biggest differentiating factor between investing and trading. Now, the next thing is, what is the actual conviction based off of? Why does someone believe trading is the best, and then why does someone believe investing is the best, or what do they do to back their conviction in their positions? With investing, it's much more intrinsic value oriented, meaning the conviction stems from the quality of the company that you're investing in. Now with trading, it's much more price action oriented, right? So you're just looking for price action that can potentially make you money. You're not necessarily worried about what the quality of the business is, or who's involved in the business, or what the business does. You're more so just looking at price action, charting, technical analysis, volume, things like this play much more of a role in your actual decision-making process. The next thing, we have compound growth versus quick profits, right? So this is another kind of outlook between the two. Trading, it's much more quick, like we already know, shorter term. So the profits are much more short term. You're trying to realize gains much quicker opposed to investing. You want to avoid that, capital gains tax and things like this. So you also get to introduce compound growth. Warren Buffett has a quote saying, compound interest is the eighth wonder of the world, I believe the quote is. And it's true, right? Compound growth, if you can achieve compound growth, and once you start getting into that compound momentum, it's awesome, right? So next is trade frequency. So investing, much more lower frequency of trades. Investors typically take, it's hard to really just pinpoint a solid number, but it's much less opposed to trading. For instance, with someone like Jim Simons, quant goat, I don't even know how many trades his fund was probably taking a day. Definitely more than 100, right? What do you guys say? I'm not sure, but this is probably like the top echelon of trading, where you go into quant and like algo stuff, and then on this side we have Warren Buffett and stuff. So think of it from that perspective. Warren Buffett, I think, took less than 10 trades a year, I would say, on average, like including buying and selling positions. I would say less than 10. I'm not entirely sure though. But with someone like Jim Simons, like we just said, it's a much higher trading frequency when you're trading. So if you're really pushing it, it could be north of 100, depending on what type of trading style you're doing. But yeah. Next is patience versus speed. So in investing, patience is arguably the most important thing that you need to have. There's another quote from Warren Buffett where he says, the stock market is simply money going from the impatient to the patient, right? And it's true. Of course it's true. It's said by Warren Buffett. But yeah, patience. So this is another thing that you don't necessarily need to have with trading. Of course you do, right? It depends on your trade outlook and like what you're actually approaching the market with intentions to do. But trading much more rewards speed rather than patience, if that kind of makes sense. It's much more speed oriented, because like we were talking about before with Jim Simons, it's quant, algorithmic, things like this. So speed definitely gets far more rewarded in trading than it does in investing. So that's kind of the breakdown I made for investing versus trading. I hope I explained that well. Now down here I kind of made this quick diagram of just some of the investing goats and then trading goats. Obviously there's plenty more that I could have listed, but you got Warren Buffett, Stanley Druckenmiller, Paul Tudor Jones, Jim Simons. Warren Buffett, arguably, if not the greatest investor of all time. Stanley Druckenmiller, right up there with him. Both returned more than 20% annually on average. I think Warren Buffett is right around like 20% over 50 years, and Stanley Druckenmiller's around 30% over the course of 30 years, I want to say. And then you have Paul Tudor Jones and Jim Simons, more of a quant trader, and then more of a commodities trader. But yeah. So kind of puts it into perspective. If you guys want to learn more about investing and trading, I highly suggest looking deep into these people There's plenty of books that exist to really understand kind of all this stuff, but I just wanted to make this for a general overview. So hope you guys enjoy.